Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program. Kate, welcome to this episode of the Australian Finance Podcast.
It is good to be back, Owen.
Yes, we have a very special guest, Nick Nicolaides. Welcome to the show, mate.
Hey, thanks for having me.
Yeah, I think you'll be familiar to many of our listeners because you're the co-founder of Perla, CEO. People have probably received emails from you if they're a Perla customer or they've been to the Perla website, maybe checked out your profile. We're so happy to have you and Perla as the official broker sponsor of the Australian Finance Podcast. We did a giveaway just last month, and Thomas from your team sent through an email confirming who won the $1,000, and it was super exciting. So, mate, we've got a lot to talk about today. We're going to talk about you and everything that you've done that led you up to here, and we're going to talk about some, I guess, the psychology of investing and what you're building. But Kate, where did you want to start today?
Yeah, I think there's a lot to cover. And I remember in the lead up to this episode, we were having quite a discussion on regret and minimizing regret in our investing and what makes investing simple, but not necessarily basic. And I went on this whole deep dive onto regret minimization theory, which I will only touch on briefly in today's episode, but it's really interesting. But I guess, Nick, where I wanted to start was just if you could give us a bit of background into you and your journey and how you ended up starting Perla, because I know many of our listeners will be interested, given most other brokers, you'll never meet the CEO and they'll probably never step out of their office to say hi.
Yeah, well, I mean, for starters, the label of CEO is probably an uneasy one, to be honest. But we're pretty early on in the journey, so maybe we can come back to that in a few years. But we started a few years ago ideating on what was missing from the investing space, and I think we didn't start out focused on being a broker. I think is the first thing. We focused on what was happening with young people. This idea that we're all working really hard, that, perhaps the next 20, 30, 40 years is going to be a bit different for people in their 20s, 30s, 40s, right? And you're not just going to be able to go to work, put your head down, save a bit of money, and all of a sudden, later in life have that house that you bought for nothing. It's going to be potentially a different journey for people. And that was really the start of going, okay, let's build something that's going to help people, because if we don't help younger generations navigate what's potentially going to happen in the next 20, 30 years, then, we're likely to see probably just this ever-growing divide of the haves and have-nots. And so anyway, that's a bit of a fluffy answer, but, that's the truth around how we started thinking about this. We looked at all these different ways you could start a business. And at the time, there were heaps of new super funds coming out. And there were heaps of neobanks coming out with, cool marketing and debit cards. And we sort of looked at both of those options and were like, wow, they seem like something you need tens of millions of dollars to get off the ground, and it may still not work. So we chose shares because there's something for everybody. There's low minimums. People have a general understanding of them. The ETF product itself had become this new thing that was just super easy to use, understand, and we sort of leveraged ourselves into that. So that's a little bit of the foundations of how we came to be in shares to start our business. But it's always going to come back to what is a holistic wealth platform? What are all the things you need to be successful with money to ensure that all the hard work we all do as young people actually pays off one day?
Mm. Hey, Nick, for people that haven't used Perla, it's really striking when you do log in for the first time, well, firstly, how simple it is, but also like some of the features just intuitively make a lot of sense. So, for example, like linking your bank account to your brokerage. For a lot of brokers, it's like you have this kind of like mystical bank account that's somehow linked to your brokerage account. Whereas, say, with Perla, you can see your wealth inside the platform alongside your shares. So you can see like your cash balance alongside shares, and your ETFs and whatever, and your US shares, whatever. But then also it looks like you're kind of building out a marketplace. And the thing that I probably like most is like the automated investing. So like you set a portfolio, and then depending on whatever rules you put in place, like once my balance gets to $1,000, invest the money, so on and so forth. I think maybe an interesting question just quickly is like, what are you excited about? Like what features are your favorite?
Yeah, so I mean, there's a lot to be excited about. I think, as boring as it sounds, what we're doing with the whole topic of automation is really exciting. So, for those who don't know, we launched our product in March of 2021, and it was super simple. It was just Aussie shares. There was some community elements where you could see other people's portfolios, and we had auto invest. And so apart from auto invest, a lot of it was, pretty similar to what you could get elsewhere. Now, fast forward a year, and auto invest is turning into this holistic automation tool, and it's going to very soon encompass everything from where your salary first goes, distributing that into, say, an emergency fund, your investing portfolio, potentially additional top-ups to your super, even philanthropy. And it all comes back to a really simple premise of investing is about making a few really good decisions and then continuing to reflect on your goals, your financial position, rather than this idea of investing being this transactional thing that you do all the time, right? So to bring it back to real practical terms, what we thought was missing from investing platforms or trading apps, whatever you want to call them, was they gave you these tools, and the tools were by nature really tactile. So you had to log into your bank, you had to send the money to your broker, you had to log in during the market when you're at work, whatever. Then you had to sit there and look at market depth for a company or an ETF that you really had no sway over the price on at all. And we looked at all these little kinks or hurdles to investing, and we thought, well, investing shouldn't be this thing where you're second guessing every step of the way. Should I invest on the Tuesday? Oh, the price has gone up. Oh, wait, now it's Thursday, the price has gone up a bit more. Now I've completely lost momentum. So the automation tool and auto invest in general is where we're really focused, because we think that's where a key trend of not just investing, but everything in life is about simplification, less time, less worrying, all that sort of stuff. So there's a bunch to be excited about in terms of net wealth and new investing products. But if we can continue to invest in this idea of simplifying and automating your life, the good things, then we can start to kind of offset the fact that credit and bills are decades ahead in terms of automation.
There's a lot of automation in our lives, like you said, with bills that sort of takes away from your financial future, especially if you don't keep an eye on it and renegotiate each year. But I think automating when investing, if you have set up a solid plan, is a really good way to use technology in your favor to build your financial future, and really just focus on what's important to you in life, rather than, as you mentioned, having to think about it every day.
When we've been working through this as a company and talking to customers, there's a really interesting psychological hurdle for people with automation, because with a lot more education around not just letting the costs in your life roll on, subscriptions and automation, in a weird way, for some people has a double-edged sword. So I think the really important thing that we've been trying to focus on is having the tools to automate, but not having the hurdles, just switching up or tweaking or doing manual alongside automation. So for us, when we found out really early that as a platform, we needed to be just as good, just as useful for someone who wants to log in, buy at a particular time, as for someone who wants to automate and set and forget. And then the people in the middle and there are a lot of them, that are automating into, say, one core ETF or asset. And then they have a bunch of little things when they have spare cash from time to time around that they'll go, I'll buy some here, I'll buy some there, or if there's a dip, I'll buy a bit more of this thing. So for us, the future of automation is not this train you get on, it's hard to get off and locks you in. The future of automation is something that when it suits you, it makes the next steps as easy as possible. Whether that's sticking with automation or tweaking it or reflecting or stopping, if that makes sense.
I was going to say on that, that I imagine, the next 3 or 4 or 5 years, a lot of people, a lot of people, I can't imagine how many, will use Perla for that core of their portfolio via the automation. That is just such a powerful tool. It's incredibly powerful, which is why I'm so surprised no one else has done it over so long, right? It's so obvious that it's so powerful, and you guys come in and did it.
We're starting to see it pop up a lot in marketing.
Yeah, right. Okay, yeah. Okay, interesting.
A lot of people are putting auto dash invest, auto space invest in their ads, and it's basically just direct debit, right? So it's coming. I think people are taking notice, which is great, right? But our aim is to continue focusing on improving and improving. So hopefully staying ahead of the pack is what we do.
So, Nick, one of the things that Perla talks about a lot is the idea of boring investing. And this definitely doesn't mean simple investing. But one of the things Owen and I have talked about on the past on the podcast is that if you want something really exciting, you can go to a music festival or maybe to the zoo. But when it comes to investing, you don't want every day to be the highs and lows, the swings, staring at your investment app on a constant basis and making different decisions and trying to find the next big lithium mining company or something like that. Are you able to talk a bit more about the Perla or your philosophy behind boring investing?
Yeah, absolutely. I mean, let's just acknowledge, I think, that we've built the platform from the ground up with a lot of people who are non-finance background. I mean, I've got a finance background, but my co-founder, Hayden, who's CTO, had not invested until we were in the ideation phase. So I think a lot of things that go along with that are we've never had some brand agency come in and say, here's your angle. We've never had consultants come in and say, hey, guys, there's this gap in the market for boring investing. It's just sort of grown a little bit. We put boring on the website a year ago and it's still there. So let's not make out that there's some huge kind of elaborate marketing plan around it. For us, it honestly started as just a bit of a tongue-in-cheek jab at what we saw was happening in the industry, where people were taking, I think, advantage of what was happening in the market, the huge volatility we saw in 2020, this idea that these stocks were just going up forever, and they were pulling people into the industry, which on its own is good, right? It's educating people about share investing. It's getting people in, and like myself, getting people to learn by doing, making mistakes. That's all good. Boring investing for us was just a way to grab people's attention and open the conversation that investing didn't need to be this exciting thing that it was made out to be, but not because exciting is bad. It's just that our idea was that the exciting side of investing is rarely exciting on the positive side. And I've been there when I was younger, looking at my app, seeing prices go up in fractions of dollars and whatnot. And it's all encompassing at the time, but you rarely look back and go, wow, that was time well spent, or that was good for my mental state, or that was good for my finances. So for us, it was just a way to go, hey, here's a different point of view. You can still do everything you want to do. You can still invest. It's still fun. but let's change the dynamic from this game to the fact that you're playing with the money you've worked hard to earn. So let's go the other way.
I see that all the time, Nick. Like, it's not until you zoom out that you realize that the exciting stuff is often not the thing that leads to wealth creation over the long term. And, we see that the longer you stay in the game, the longer you have that focus and discipline, the better your outcomes, because time does the heavy lifting for you. I think we all go through that phase though, right? Where we have that kind of up and down in the emotional side of things.
Yeah, and I think for us, and the way we've built our platform is that there's no right or wrong answer. And it's certainly not there's a right way to do it, and if you don't stick to it 100%, you're out of touch or whatever. And we see from our data, there's not this absolute focus on just being passive or just doing ETFs or just stocks. It's obviously like an individual thing, but you've got to make it work for you. And I think if we focus on what we will have done well if we succeed is giving people the tools to be sensible with most of their money and learn and have fun and grow picking the stock they like. What we want to be having the conversation on, though, is it doesn't have to be one way or the other. And you shouldn't necessarily be dumping your $500 or your $10,000 or whatever into all risky stuff. Or because history has shown that things happen on the stock market. Bad things can happen, I guess. So we're about the conversation. We're about the tools to explore that whole idea of it doesn't have to be one way or the other, rather than you should do it this way.
I know many of us started with trial by fire, investing in shares, not knowing what we're doing, just buying and selling a bit randomly. But have you noticed any trends with investors coming to a platform like Perla and starting with a very simple, low-cost approach to investing that's sort of very grounded, and it's not about what stocks move the highest amount this day? Do you see that continuing over time as they keep investing over the years?
Yeah, absolutely. And I think one of the things that excites us as a team is that obviously we get a lot of data. There's a lot of people coming to us who've made their first investments in the last 6, 12, 24 months, right? Obviously, we don't know what it was like 5 or 10 years ago. But overwhelmingly, I think the data shows that a lot of people on Perla, a lot of people's first investment is an ETF. And if I look back to my first experience, it was not that, right? So I think the future is really bright. I think the level of education, thanks to people like you and all the different ways people are trying to engage young people, is a huge positive. And what we see in terms of the user behavior is in the first 2 months, people get their portfolios set and they have an average of 2 to 3 shares in their portfolio. And, that's predominantly made up of ETFs. As they go on, the behavior is adding more each month. So we're seeing behavior that it's not just putting money in one time and playing with it. And then the last part of that is people are customizing, whether it's with a thematic ETF, stocks. We still have, I think the top stocks on Perla will be similar to the top stocks on some other platforms. It's just that those top stocks on Perla make up maybe 20%, 30% of the community's portfolio, not maybe switch it the other way around on some other platforms where those top stocks, and like, I don't know if we can mention them, but the Zips, those sorts of companies where they're kind of well-known consumer brands, they've been heavily volatile. We still see that. We just don't see it being the predominant part of the portfolio. So that makes us feel really good. Even if we are a small company and growing sustainably, it makes us feel really good that I look at that and I go, that I would happily suggest that to anybody.
Hey, I'm going to just probe you for one question. This is totally like out of left field. Can you do you have you ever noticed if that trend in people starting with ETFs could be divided by any type of demographic data? So like male or female, young v old. Like, can you see that? You might not have it at the top of your head. Maybe we can follow you on Instagram and find out if you do get it. That'd be really cool.
Oh no, I mean a huge part of learning about where to invest in our platform is looking at the community data, right? And so we focus on this hugely. We set out to build a platform for everyday people, and if you try and break that down into data, you go, well, that means we want an even split in ages, we want an even split in genders, and an even split also in people with putting their first dollar in versus people who have considerable portfolios. And this is going to sound like it's conveniently rounded, but it's not. So we're about 50-50 women and men. Our biggest cohort, about 50%, are in that kind of 27 to 35. And then on either side of those age brackets, it's evenly split. So for us as a community, it's quite broad. Now, I think your question was about, do you see any differences in investing? And the answer is not on the whole. So when we look at the top 10 assets, there's not a huge amount of skew by age or gender. And it's really exciting because it means that somehow the education is getting to a 19-year-old and a 40-year-old, and we're tapping into this niche of people who are like, okay, I get that this is sensible, I get that this works. It's not a young person thing, it's not an old person thing, it's not a men thing, it's not a women thing. It's like, it's a mentality. And that's what's really exciting to us. We're tapping into a mentality rather than a demographic. Just to give you something that's a bit more kind of exciting though, I guess, is there are one or two spaces where we've noticed quite a difference, right? So, and this is just information. We don't know why this is, and we can talk about it, or we can have assumptions. But when it comes to the top 6, 7 ESG ETFs, so there's a handful that are Aussie, there's a handful that are global. We all know them. They're heavily marketed for their various differences. And on those ones, a really interesting thing came to us recently where the skew was more like 70-30. 70% women were investing in these ETFs versus 30% men. So again, I'm not sitting here saying that I know the reasons for that, but it's probably the only spot in the community where I say there's definitely something going on there, right?
Mm. Yeah, that's fascinating in itself. And that's what I was probing for. So, so thank you.
Oh, good.
No, but you know what? There's actually, and you know this, but the way you described your audience is almost exactly, that's an exact replica of the Australian Finance Podcast. Like, we see lots of men and women. That's our principal range. Most people who listen to this show are between like 25 and 35. And then you've got either side of that. Interestingly, we don't have many in the 18 to 24 bracket. In fact, that's our lowest demo overall. So I find that interesting too. Maybe they're listening to different podcasts. Okay, so one of the things we wanted to talk.
Maybe if you've got more jokes on the podcast.
Yeah, we need to get more jokes. I've been trying to.
Don't start them, Nick.
Okay, watch this space, Nick. Watch this space. Actually, our most popular episode from the last 60 days is Money and Chill. That was with Monique, our producer. So maybe we're going somewhere. Who knows? Okay, so a part of this episode, Nick, is we want to talk about regret minimization. Kate and I have been on this bandwagon for quite some time about how we can think about regret minimization, and this is important for investors because oftentimes, we know the data says start early, right? And with that comes a lot of regret when people in their 30s, 40s, 50s say, "Oh, I wish I started when I was 20, even if I had $50," right? And there's this quote from Jeff Bezos, which goes, "I knew that if I failed, I wouldn't regret that. But I knew that one thing I might regret is not ever having tried." And we see a lot of investors in this space where get overwhelmed by analysis paralysis, and they just think to themselves oh, how do I get started? Is it too scary to get started? I saw one question on the Perla exchange, for example, which was basically like, actually, I'm worried about having too much money in the future, and what do I do with it? Like, there's so many things that come to mind when we think about, how we're scared or whatever. I guess maybe we can just riff on this as a group here. And maybe to you first, Nick, is like, how do you see, from a financial perspective, people can minimize their regret?
Yeah, so I mean, I'm a fairly methodical person, so I think this is a very personal topic. But the way I look at it is the things I've regretted in life, big things, small things, whatever, and we all have little things where we're like, oh, I wish I'd done something different. For me, it's more about going, if I've done the work, or I've done everything reasonable I should have done, and it still didn't work out, then I try and rationalize that as going, it's very hard, or you shouldn't pressure yourself with regret if you've actually done the sensible thing. In investing, personally, I probably wouldn't label it as hard as regrets, because, I've never made any major mistakes. I've lost money on stocks, sure. But the times where I do look back and I go, gosh, that was silly, were the times I did no work, were the times I took a silly tip, or I thought, I'll just do this for the short-term game and I'll get out at the right time, and you never do. So for me, it's less about, you mentioned analysis paralysis before. I know that's a real thing for people, but for me personally, it's a much more fundamental human thing. Like, have you taken the steps? Did you do the right thing? And if it didn't work out, then don't be too hard on yourself, right?
How do you think about it, Kate?
Yeah, I was listening to a podcast the other day, and it talked about the fact that you have regrets now is proof that you are not the same person as you used to be, and you have grown. And I think in terms of investing, I know we get a lot of questions from people in their 30s and 40s who regret not having started early or having access to that information earlier. And I think it's sad if that stops you from actually getting started in your 30s and 40s. And so I think it's good to understand that maybe you could have started earlier if you'd had the resources at the time, but that doesn't mean you can't make a different choice now. And I really would say not to let that paralyze you or hold you back. The fact that you could have started earlier, like, just forget about that and get started from this point, because you can still make a lot of change in your 40s or 50s as well. And also on that point of analysis paralysis, I know we can get stuck between, do I go with XYZ broker or ABC broker, or do I buy this ETF or this ETF? And with a lot of these decisions, if you start small and invest regularly, they're not all or nothing. If you want to change your mind next month, next year, you can do that. Maybe there'll be some fees involved, maybe there'll be some taxes involved, but they're not, you make this decision and you can never change your mind again, which I think is a good thing to think about.
Yeah, I find that, like, it's really interesting hearing your responses to this, because I feel like one thing that comes to my mind is that, like, there's always a sacrifice with whatever decision we make. If there's a decision that we don't make in life. And, like, for me, if I reflect, so I'm 31, if I reflect back on my 20s, I basically committed my 20s to building a business. Like, one of the regrets that people have is, I didn't start a business. And Nick, this, Kate, you've done a lot of, like, side hustles and your own stuff. And even Monique, who's our producer, she's done the same as a freelancer. And that, like, the toiling that goes into that, how hard it is. And you have to make a huge amount of sacrifice to get something like that to be successful, right? So now I regret not having more fun in my 20s, right? But if I had more fun, then I might regret not giving this business a go. And so we always have these, like, regrets, I find, no matter which path we go on. I think there's this idea of envy, which is probably something that shouldn't come in. Oh, I'm envious of someone else went this way. I'm envious of that person's investment portfolio. And we compare ourselves. And I think that's a different thing which should probably be avoided. But for me, like, yeah, maybe I would have done one or two things differently, but we wouldn't have known that, like you said, Kate, until you get to the point in the future where you can make that decision, right? And you can think like that. I don't know if either of you guys think like that.
What are the things you did Owen, to prepare for that jump to starting your own business, I think, because that's, it's not necessarily an investing question. It's more of a, what is the thought process you went through? How did you structure your life? How did you de-risk certain things or not, so that you could give it the best shot? I'm interested.
Yeah, for sure. So I think there are certain things that you have to do if you want to start a business. One is you have to be technically you have to understand the rules, and how things work. So most often that requires doing a trade or, going to university. So lots and lots and lots of study. And the sacrifice there was weekends and weeknights and the constant feeling, which Kate's going through now, doing some more study. And everyone that's listened to this podcast who has studied knows, and you know this, Nick, we talked about it off air. So that was something that you have to get right, because it's only from that point then people begin to respect you for those skills and pay you for that. Then the second part of that is, for me at least, was recognizing that if you're going to take a risk, a calculated risk, so you want to be calculated, you want to take that sooner rather than later so you've got more time to recover from it. That's the way I thought. That was my thought process. So basically, everything in my life, organizing around that. Okay, I'm going to do this. I'm going to do what I need to do. I'm going to do the hard work up front. And this is where that savings comes in. We see compounding. And then hopefully it pays off in the future. I don't know if that makes any sense, but that's kind of how I approached it. Yeah, I don't even know if that's an answer.
Yeah, no, I think it is. I mean, it's obviously pretty circumstantial to how old you are, whether you've got dependents, etc. But, for me, I was 30 or thereabouts when the idea of Perla, maybe I was a bit older than that. Anyway, I was somewhere around there. When the idea of Perla started coming together, I was working in a finance job. I had one child, another one on the way. And, our third child was born in June 2021, 3 months after we launched Perla. And that to a lot of people is going to sound a little bit crazy. And it,
yeah,
there's a lot of risk attached to that when you've already got this life set up around you, and you've got to try and obviously build the business, be present in your family and have a good time. And it is and was a bit crazy, but, coming back to the idea of regret, I genuinely think I did everything possible to smooth that process. So we sold our apartment a few years earlier. We had plenty of sort of emergency funding, still do. Worked out a way to extract myself from my job in a kind of smooth fashion, dropping days over a period so that I could keep some income coming in.
Same.
And I look back at that and I go, I invested my life into this business. I did it at a time where things were pretty full on for our family, but I didn't do anything silly. And so even if Perla doesn't become a massive success or it hits trouble in the future, I will look back, and my partner, Kate, my wife, we will look back and we will think, well, we weren't irresponsible. We weren't silly. And therefore, even if it doesn't work out, there won't be regret attached to that. There'll be hard work, but that's the way I try and look at everything, big and small. It's like I genuinely think we did the right thing either way.
I think one of the other things that help minimize that regret as investors is just focusing on what we can control in our own investment universe, such as the fact that we can't necessarily control what the Australian Stock Exchange does next year or for the next 10 years, but we can control how much we put aside each month into our investment portfolio or how we spend our money each month. And I was wondering if you had some thoughts on what are some strategies that we as investors can potentially use to focus on what we can control while we're investing and not get stuck up on all those external elements that we actually have no control over?
Well, me personally, I keep coming back to how long are you thinking this is for? And how long do you really not need the money for? I know that doesn't sound like very fundamental investing, but some of the mistakes I've made is investing in something, not fully figuring out my own liquidity needs, right? So the number one thing you never want to do is sell at the wrong time or sell out before your investments had the opportunity to really do what it's going to do, right? So for me, the first fundamental thing is, goals are important in terms of visualizing, but the very, very practical manifestation of a goal is how long could this take? And do I have the ability to see it through? And have I managed the risk that I'm going to have to pull the money out early? And I think a lot of people, myself included, will make that mistake from time to time, and we will look back and we'll go, gosh, I should have stayed the course. I think that there's plenty of things. That's the one thing that comes to my mind. I don't know. What about you guys?
Yeah, I would agree with that. It's an interesting segue here because we talked about obviously businesses and private businesses like Nick and I sharing those, like taking that risk. A lot of investors who are investing in the stock market tend to forget that we are investing in businesses as well. So you are taking a very similar risk with your finances. It's just not the kind of the time and effort that goes into it, which is why the stock market is such a great thing to invest in, because you get exposure to businesses. And you can do that with, if you use an ETF, you get hundreds of businesses in many ETFs. So I think what you can control is you can control how you interact with the market, but what you can't control is what decisions are made at businesses, what other investors are doing. So I think really if you just take a step back, a lot of the conversations that people have about investing and the frustrations we have is like, well, why doesn't this stock go up? Or my stock's down. Or you can't control any of that. No matter how much you complain or how much you get worried about it, you can't. Really, all you can just do is step back and think, well, what can I control? Fees. I can control how much I invest, how often I invest, and I can set my goals in the future. So each of those things, how can you make them easier on yourself, I guess, is the key point. And oftentimes it all comes back to behavior, which is where we probably should spend a lot more time.
Yeah, I know. The time frame's an interesting one because it's quite easy when you're starting to say, oh yeah, I've got a 10 or 20 year time frame, but life changes so often, your goals change. Often you might not think you want to buy a house for 5 years and suddenly you do want to buy a house this year. So in one respect, you can invest with that long-term time frame, but then also you have to be able to adapt the plan as life changes.
Yeah, definitely. And I think, and adjacent to that is if you believe in a company and you believe in the long-term prospects and you've invested in a company, I think there's a lot of, much more credentialed investors out there than me that will say something like, don't get tied too heavily to your initial decision if you feel like the leaders of that company or the direction of that company has changed, or they're not living up to what you thought they were going to do, whether it's international expansion or whatever. And, I think whether it's focusing on how your life has changed and that not being, not restricting yourselves from making the right decision, or not getting caught up in the fact that maybe that wasn't the best decision to invest in that company because they haven't lived up to it. And all this other spectrum in the middle, it's like, don't be too hard on yourself if things do change, and try and really reflect on what your situation is now and go, well, I'm not going to necessarily be driven by a decision I made 2 years ago now that the life or the world or whatever has dramatically changed. And that's okay.
Yeah, I guess it comes back to that changing your mind when the facts change. Like you don't have to, I think a lot of people when getting started, they think once they make that decision, that's the only decision they can make. They have to invest with that broker or that ETF forever, but you can keep changing your mind. Like you don't want to be changing every day because that's going to become a very costly and time consuming exercise, but you can change your mind. And I think if you know that makes taking that first step a little bit easier, because if you pick a broker that's not the right broker for you, you can open another brokerage account. You're allowed to have multiple ones.
No, and the technology just gets better and better, right? So, on ETFs and stocks and on apps, the switching costs are getting to the point where they're not material, right? There might be tax implications that you've got to figure out, which means you don't want to be changing your mind all the time. But, I think that for this idea that, let's focus on some community data that I think is a little bit relevant here. It's like we see a lot kind of two different behaviors. One is, we talked about ESG before. It's a good topical example. We see a lot of people start with a basic index, and then all of a sudden they'll stop investing in that index and switch to a slightly different version of that index, whether it's ESG or not, right? They'll just switch. They won't sell. And that person, if we just try and think of that persona, we go, that person has made a few decisions there. They've made a decision to change course, which is totally fine. But they've also made a decision to go, I don't feel strongly enough that I need to sell out. Like it's this big move I'm making. So I'm not going to sell out of all of my non-ESG indexes and go straight into ESG because there's tax implications I don't need to, it's costs that I just don't need to. Then at the other end of the spectrum, there are those people, and there's no right or wrong here. There are those people who go, I'm making a decision. I'm going to change direction. I'm going to sell out of all that stuff. I'm going to go whole us into this other, slightly different direction. And I think the reason I bring that up is the fact that those people are making those different decisions just gives an example of the many, many ways you can change your mind, the many ways you can do that and not cause yourself stress. So for some people, the stress of having the old stuff in their portfolio might just stress them out too much, and that's okay. Move on. I think that's an interesting thing that we're seeing a lot of.
Yeah. And I guess it comes back to really getting to know yourself as an investor and what makes you comfortable and sleep at night. Whereas you might be comfortable managing a portfolio of more ETFs, or you might want to bring it back and make it as simple as possible. And I think that also helps with not doing the whole journey alone. And that's something that I remember we both spoke about at the Get Rich Slow Club in Melbourne a few months ago, was the fact that you don't want to be doing all of this by yourself because it is overwhelming. Whether you build a community of people in person or you find people online, actually having people to share each step of the investing journey with. And when you run into roadblocks, when you've got all those quote unquote silly questions about where do I find my ETF distribution and things like that, you've got people to ask about that. And I'd love to hear, Nick, a bit more about your thoughts on building your own investment community and how you see that helping people during their investment journey.
Yeah, I mean, are you talking about how Perla is approaching it, or how we can all build our own mini communities around us? I guess they're two different.
Probably
things.
Both.
Yeah. Okay. Well, very simply, Perla's idea of community was to try and tap into that mentality of let's be open, let's share, but also let's do it in a way that is not this competitive environment of this is my thesis on this stock. You're wrong on that stock. Oh my God, I can't believe you bought that stock. Because there's enough of that, right? That exists. And what we felt very strongly about was going, there has to be, or we think there's a lot of people out there who really want to engage in that conversation. They just don't want to engage in the typical stock trading conversation. And so we tried to build a platform, a home, a space for discussion that we're still working on that goes, let's tap into a mentality that perhaps isn't catered to in the Reddits of the world or some of the Facebook communities. That's pretty simple for Perla. Personally, I think if I think back, my personal finance networks started with colleagues, and I was working in finance, so that was a pretty natural thing to me. But I think the fundamental thing there is finding one person or a few people that you can just be honest with about whether it's about something that you think is a silly question or whether it's something really fundamental, like do you think this company is a good company? Find one person, then find another person, and get yourself into a position where you can just talk honestly about the things that worry you or whatnot. And whether you're on a huge forum with thousands of people or whether you're just talking to one or two people, they're both equally helpful, I think, and it just depends on your personality. I still talk about investing with one or two people, and that's probably helped me more than anything else in life. Is just having those one or two people that I think are smart.
Same. I've got one or two friends that I talk to always about different things, whether it's ETFs or companies. Like we started a journey around a similar time, and even Kate and I talk a lot. Obviously, we talk every day about investing, and it's just great to have that community around you. So Nick, we've got some questions we want to wrap up with, and these are more like short, punchy questions and answers. So I'm going to catch you completely off guard here, and we'll just see how we go, I guess. So Nick, what is your number one lesson for investors?
Number one lesson for investors is focus on yourself, because your personality, your brain, your personal situation is more important to the decisions you make than what anyone else says.
Mm-hmm. Nice answer. Like it.
I like it.
What's your favorite investing resource? Well, I'm going to be a bit annoying here and say Perla's rankings. No, and I'm genuine in that. I still, even though I work for the business, I still get a little bit of a buzz landing on the shares page and seeing, ooh, that ETF's actually jumped up into the top 10. Wonder what's happening there. So it's not interactive. It's not engaging. It's just like literally a ranking, right? And I just like that because it's unfiltered. I like it. Sorry.
Yep.
Humans are obsessed with rankings. We rank everything. So there's probably something to it in our psychology there.
Okay. And final question, easy one. How do people learn more about Perla? Like, where can we go?
Well, thanks to people like you, they can hear from this conversation and others that you have, and maybe even a little ad at the start of the podcast. So sorry for that one. But so I think, where can people learn more about Perla? Obviously we've got a website, and we try and put ourselves into that website, and you can definitely get a feeling on our about page who we are as people. You can literally see who's in the team, who's building the platform. I think, though, if you really want to understand our nerdy, self-made vibe, and I'm not saying it's like prolific, but our socials, like our Instagram, is definitely something that we don't even have a social media person or a marketing person, but it's kind of this hodgepodge of things we think about investing, a bit of data, a few really bad jokes.
Some of the best memes.
Yeah, a few really bad jokes. And if you really want to get a feel for who we are as people and how that then manifests into the platform, that's, Perla HQ is a good place to start, I think. And then, sorry to keep going on, but when we started this, before we even had a platform and a product, myself and my co-founders sat down and each separately wrote a bit of a story about why we were starting this journey. And, it's got some corny stuff in there, but it's still the truth. And like every once in a while, I'll click on the link weirdly and read the first paragraph or two. And it kind of reminds me a lot of why we started this journey. And so you can find those at our blog page if you sift through a lot of the other stuff we've done. But, I think what you'll find is you get a really human, personal view.
Actually, when I received an email from you, I don't know how long ago this was, that's actually the first thing I read because you've got it in your email signature. This is why I'm founding Perla, which is pretty cool. So you can also, we've put all links in the show notes to that. You can also check out the Rask Perla profile page. So you can, if you want to learn a little bit more about us, you can see some of the things that we've uploaded to Perla as well. We're also reasonably active on the Perla exchange if you have questions. And you can use the coupon code RASK when you sign up. Just for full disclosure, we do not receive like a volume-based thing. It's not like a typical affiliate code. It just helps us so we know who's coming through the community. And you also get Perla credit when you join. So that means you can get free brokerage for a little while, up to a certain limit, which is $50. But given trades are $6.50, Nick, you get a fair bit of time to use that as well, 6 months. So it's pretty rad. Go check it out. It'll be all available in the show notes. Nick, it's been our absolute pleasure. We get to chat to you pretty often, but we're stoked that you joined us on the Australian Finance Podcast, mate. Thanks for coming on.
Thank you both for having me, and I just really appreciate you didn't put me on the spot with any sort of joke requirements.
Well, that's next time. So, first one you get off for free. The next one, watch out, we're coming for you. Kate, as always, thanks for joining me.
We'll be looking for some brokerage jokes.
Yeah, indeed. Thanks for joining me, Kate.
Thanks for listening.